Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started, any advice provided by Brandon is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you. Brandon Kolk is authorized to provide general financial product advice in Australia and is authorized representative number 1305795 of Guideway Financial Services Proprietary Limited, AFSL number 420367. Please see the description box for Brandon's financial services guide. Past performance is not a reliable indication of future investment returns. But with that said, let's get into another episode of the Young Investors Podcast.
All right, guys, welcome back to yet another episode. We are back. Apologies for the break in programming last week. Hamish can explain what happened there. You've not been well, right?
Yeah, I got sick again. You know what's crazy? I was thinking, I don't know if this is just a coincidence, but before COVID, I can't remember a single time where I got a really bad flu. Like I've had colds and stuff, but not like a flu where you have aches and you're out for like a week. And since COVID, I think I've had like between COVID and like flus, I feel like I've had like maybe 6 or 7 really bad, like week to like, well, this one's been like 10 days and I'm still not even, you might be able to hear it in my voice a little bit.
Yeah.
I'm still not 100%. Like 7 to 10 day, like fully sick. It's kind of crazy. I'm kind of
been
cursed.
Absolutely slammed with illness.
Yeah, I sent you a photo of my eye. I haven't been sleeping as well this whole week. I sent Brandon a photo of my eyes and they were just like red from just like no sleep.
Bloodshot.
So
Yeah,
bad.
it's hectic. You can see all the veins in your eyes.
It's
you
bad.
look very tired. Yeah, hectic.
But I'm
I
on the
remember
mend now.
you saying, I remember you saying last week that this is like the worst one you've had ever.
Yeah.
And that there's just like, well, like, can we do the podcast? Like, is it still possible? And you're like, dude, no way. I could not do it.
Yeah,
So
it's crazy.
that's hectic. Yeah, you must have been really sick. But I'm glad you're on the mend. But it's definitely, it's kind of a running story. It's a running joke between
insane.
It's like Hamish is sick again.
It's
Hamish
ridiculous.
is sick again.
It's crazy. It's like even one flu a year is kind of unusual, I think. It's not normal to get the flu every single year, I think. And I think I've had it at least twice this year, maybe even I think twice this year and twice last year, which is
At
crazy.
least
every single
you've
time
been
I've
sick a lot.
traveled, every time I've traveled, I've gotten a flu. And then I've had other ones as well, which is just it's just crazy. But anyway, I'm feeling, I'm 95% better, so I'm happy to be back doing something. The other thing is like when you're sick, it's just the worst part is that you can't do anything, and it just feels like being able to actually like get back into the podcast, and I'm making a video at the moment as well, is just I'm getting my energy back, just being able to actually do something. So yeah,
Good. Everybody on the other side of this podcast is happy that you're back. I'm happy that you're back. It's good.
All right. What are we talking about today?
What are we talking about today? Well, what am I going to talk about? I am going to talk about SpaceX for a little bit because they have linked up with the Pentagon to do something quite interesting.
Right.
We'll talk about Amazon investing $4 billion in a startup, which is pretty cool. And I wanted to talk about, so I'm making a video on this at the moment, and I wanted to get your thoughts on it as well. I'm taking a look at how much of the inflation that we've seen over the past couple of years has been a result of what people are calling greedflation, essentially just companies just jacking up prices, measured by the increases in their profit margins.
Right.
So we'll talk about that because I want to get your take on it.
Yeah, interesting.
But what are you talking about?
We've got an update from McDonald's Corporation is doing something that they haven't done in decades. We'll talk through some updates around AMC. This is a story from a couple of weeks ago, but I think it's still kind of relevant. AMC has their hands out again, begging once again for money
biggest position
from their investors. Both, the what is it? I think it's the official position of the Young Investors Podcast, right? I think it's something like that. And eBay wants to do parcel delivery a new way. So we'll talk through those stories.
Okay, nice, very cool.
Well, with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors. That's seekingalpha.me/young investors to try Seeking Alpha free for 7 days, I believe, is their current free trial. But also, if you use our link, you'll still be able to get, I checked it this morning, a $50 off coupon off your annual subscription. So again, as I've said, I don't know how long they're doing this promo for. They said a couple of weeks and it's already been, 3-4 weeks. So I'm guessing it's probably going to end soon, maybe not. But yeah, go check it out if you haven't already. And as always, thanks to everyone who signs up to these services through our links and is supporting what we do here.
Yeah, definitely. $50 off. Get it while you can. I don't know about you, but this is obviously we're sponsored, but this is not really. I'm not being paid to say this. Yeah. Out of all the kind of subscription stock analysis things, I definitely use Seeking Alpha the most.
Yeah,
I don't know if you use it much.
Yeah.
But I use it like all the time.
Yeah,
it's
Seeking
just very
Alpha,
convenient.
Seeking Alpha ticker.
I like the 10 years. I like the 10 years of everything just right there in front of you. Makes it very easy.
Yeah. Seeking Alpha and Ticker, I would say, are probably the two services that I use the most.
Ticker's good
for all kinds of things. Yeah, Seeking Alpha particularly for just news for around companies and analysis around companies. You get like this. It's a massive community of people who are just actually analyzing individual companies, and it's really good if you can sort by people who think that that it's overvalued, for example. So if you're looking at a company and you think it's good, you can look at all of the negative arguments and kind of flip invert exactly, which is kind of a big part of value investing. So that's probably the main thing I use it for.
Ticker's good. Ticker's more the 13Fs.
Yeah.
But it's good because you can see the international, not all, but a lot of international holdings of the big super investors as well. Anyway, sorry. Drifting off track. Where would you like to start today, Hamish Hodder?
Let's start with McDonald's because McDonald's is doing something that they haven't done in almost 20 years. McDonald's, they're getting a bit greedy. McDonald's Corporation has raised their service fee or their royalty fee that they charge their franchisees for the first time in 17 years. So
wow,
it's been a while since they've made a change to this fee. And maybe to give a bit of context around McDonald's business model in case you're not super familiar with it. Maybe you know a little bit about this if you've looked into it, or maybe you've watched The Founder, which is a great kind of movie documentary kind of around how
so good
McDonald's turned from just being a one restaurant owned by a couple of brothers into the massive kind of franchise chain that it is today. But about 95% of all McDonald's stores, of the 13,400 McDonald's stores, are franchised, which essentially means that they're run by independent operators who pay an upfront fee. So they pay an upfront fee to McDonald's, and then they are essentially able to run and operate their own McDonald's restaurant. So all of the revenues from selling burgers and fries and everything, and then all of the expenses for the cost of food and the staff are all on the franchisee. If that's the case, then how does McDonald's Corporation make money? Well, they really make money from two ways, basically. One is they collect what's called a service fee or a royalty on the revenues of the restaurant, which we'll talk about in a little bit. So they kind of take a piece of the revenue off the top. And they also operate the supply side of the business. So all of the food, the supplies, and even the rent is paid to McDonald's Corporation. So McDonald's Corporation owns the land, for example, and they own the supply chain for where the lettuce comes from and where the chicken comes from. And the franchisees actually then go and buy all of their supplies and things, such as the burger buns, for example, from McDonald's Corporation. Because a big part of what McDonald's is everything is uniform. So, the buns are the same, the size of the patties are the same. Everything is the exact same. And the way that they're able to manage that is they control the supply chain. All of the franchisees buy the exact same burgers. They don't have kind of their free choice of which burger buns they're going to be buying or something like that.
As we know, the idea is that no matter what McDonald's you go to, a Big Mac's going to be a Big Mac. A cheeseburger's going to be a cheeseburger. Yeah.
Yep. Yeah, exactly right. So yeah, those are the two ways that they make money. But yeah, today we're kind of talking a little bit about the service fee or the royalty on revenue. And historically, or at least for the last 17 years, it has been 4%. So they take a piece, not an enormous piece, but they take a reasonable piece for themselves for essentially the franchisee being able to market their restaurant using the McDonald's brand, the value of the brand, and what we know, how powerful that is. This week they've increased it to 5%, which might not seem that bad. 4 to 5% is only a 1% increase, but it does just basically mean that restaurant margins for franchisees have gone down 1%, which restaurant margins are already fairly tight for restaurants. You don't tend to see, restaurants delivering, 15% margins or 20% margin. Usually they're quite thin because there are a lot of expensive components. The food is very expensive. Beef, for example, is incredibly expensive and going up, and labor costs have been really, really high. So it is just an added cost for franchisees who don't really get anything, in return for that.
Yeah, it's interesting because I would imagine, I'm wondering how this works, because I would imagine a lot of the franchisees already have like contracts with McDonald's that like locks in 4%. So is there like does a contract last for a certain amount of time and then it rolls over and then it's the 5%? How did they talk about that?
Yeah, so that's the silver lining, and that is that this actually only applies to newly franchised restaurants or when there is a change in franchisee for an existing restaurant.
Right,
so
okay.
This won't actually affect the current franchisees. You're right. So they'll still have their 4%, but if a new franchisee takes over a previous McDonald's or a new McDonald's is built, then that person from now on will be charged 5% instead of the previous 4%. So the economics essentially for new franchisees is maybe a little bit worse. Although maybe you could argue that the McDonald's brand has grown in value in the past 17 years. So, that's the give and take, I guess.
I'm just wondering, and I'm not sure if you know this, do franchisees have any wiggle room in terms, are they allowed to set prices to any degree, or they have to run with the prices that McDonald's tell them to? I'm just trying to think if there's any variation in prices from McDonald's. I don't think there is there?
As far as I'm aware, at least through McDonald's, I mean, it varies from chain to chain, but I'm pretty sure with McDonald's, it's standardized through McDonald's Corporation. McDonald's is kind of, a lot of franchisees have a lot of restraint on their franchisees, but McDonald's is renowned for having everything done by the book, like the way that they train staff. Everything is very much it's very restrictive. So there's not actually that much wiggle room that the franchisee can do in order to increase business or anything like that. So I would assume pricing follows a similar thing.
Yeah.
And
interesting.
To be expected, franchisees are, of course, not very happy. McDonald's Corporation has almost doubled its profits since 2010, mostly on the back of increasing per restaurant sales. So the restaurants have been raking in more and more money every year. And yet, according to National Owners Association, which is a group that represents franchisees, they were quoted saying franchisees are making less money per restaurant today than they did in 2010, which is kind of crazy. From the franchisee perspective, it's kind of McDonald's maybe kind of exerting their force kind of on both directions. Because we spoke about they are increasing this royalty fee, and they haven't increased it for a long time, but they also own the other side of the balance sheet, right? They own the supply side, so they can increase the costs for the business, which is essentially the same thing as increasing the royalty fee. So it's an interesting dynamic, franchisees, and a lot of the time they're not run very well. We've kind of seen our fair share of poorly run franchised model businesses. I think McDonald's is probably one of the better run ones. I think the economics aren't terrible for franchisees generally compared to others, but interesting to see them make this move now.
Even though it's very restrictive, part of the success is that everything's done by the book.
Yeah.
So
and it leaves less room for error, I guess, right? Like individual operator error. Maybe restrictive means you can't try things you would like to try in your restaurant, but it also means you're not going to make mistakes that and you know that McDonald's is working very hard to make sure that their restaurants perform very well, and the enormous marketing budget that they throw at year in year out all around the world, that's going to draw people into your restaurant.
Yeah, definitely. It is an interesting business model overall, though. Obviously, you'd hope that most of McDonald's increase in profits comes from just them expanding the number of stores and them becoming a bigger brand and more people going to McDonald's. But you're right. The other way that they can increase profits is by looking at the poor old franchisees and going, hey, cough up a little bit more.
Yeah.
But that I think it's there's a reason why. For how long did you say? 17 years.
Yeah.
17 years they haven't increased that cost is because if you start to make the deal worse for franchisees, then less franchisees are going to jump on board, which means there's going to be less new McDonald's opening up. So, but then maybe they've hit a saturation point where they're just like, you know what, we're at the end of the S-curve of growth. We can just start to monetize more and more. We've locked in a certain economic moat. There's a certain number of businesses that are just not going anywhere. We can just cha-ching. I don't know.
Yeah, well, that's the tricky bit, right? Like, pretty much, I'm sure most people listening to this, there's a McDonald's every 2 kilometers.
Yep.
You're driving down a main road. Oh, there's
one
over there. Oh, there's
Yep.
one. Oh, there's another. So it's end of every freeway exit or highway exit. It's kind of crazy. And I'm sure there's countries where they're maybe still expanding and testing, trying to get the menu right, because the menu can't be exactly the same as America or Australia, in other places. But yeah, you got to imagine they're kind of near the end, which is probably why this is a change that they're making. So yeah.
Yeah, interesting. Anything else on the old McDonald's topic?
No, that's it.
Yeah,
McDonald's.
In a beautiful segue, guess what I got the other day? I got a
Happy Meal
electric scooter that is made by Segway.
Wait, what?
It's so weird. So for those that, maybe if you're a long-time follower of the podcast or the channel, I moved into my apartment, which I've been waiting forever for. And hooray, hooray, finally. Yeah. No, it's really cool. I'm very excited. And with each apartment, I totally forgot about this, but with each apartment, they just give you an electric scooter.
Really?
So I walked into the apartment, like looking around. Oh yeah, looks good. And then I just walk into this box, which is sitting in the living room.
That's
I'm like,
sick.
What the heck? And there's like electric scooter.
Wait, so is it like one of those ones you would rent, like a Lime scooter, like that kind of thing?
Yeah,
That's sick. That's really cool.
It's exactly like that. But that's the thing. I don't know. I'm scared to use it because I don't want it to get stolen. Like, where do you put it? You have to keep it with you. Like, I could ride it to work because I could leave it in the office. But if you can't like take it to the shops because you can't take it into the shops with you.
No. Can you get like a
leave it
chain?
outside.
Can you get like a lock for it, like a bike lock?
Yeah, I'm sure you could. I'm sure there's a locking. I haven't really looked at it yet.
Yeah.
But I'm like, how can you lock it up? You just put it around the handlebars and then someone just comes and puts it over there. You have to like wrap it around or something. yeah, true. There's a lot of that happening around in Canberra, that's for sure. But anyway, that's my fun little bit of news.
Nice segue.
But now the not so nice segue. I'm just going to start talking about greedflation. No, I want to get your opinion on this. It's quite an interesting topic. I think we can maybe have a bit of a discussion about it. So I think as a bit of a setup, we all know that there's been a ton of inflation lately over the last couple of years. There's been so much inflation, but a lot of people have been, complaining that they think it's just corporations being greedy. And that they've just been jacking up prices and making themselves richer. And really, that's where the inflation's come from. It's not any to do with anything else. It's just greedy corporations. So I thought that I'd have a bit of a look into it. I am making an in-depth video into it at the moment, but I found a couple of things which I thought was interesting. So there's this article from the Economic Policy Institute, right? And they noted, by the way, these figures are a couple of years old because they were looking at like the heat of inflation. And as we've seen over the past 12 months, I think, or even maybe longer than that now, inflation's just been coming back down. Yeah. But yeah, this article from the Economic Policy Institute, they noted since the COVID recession in Q2 of 2020 up until when the article was published, overall prices in the non-financial sector, so just like goods and services, rose 6.1% annually versus 1.8% price growth annually from 2007 to 2019. So yes, we've definitely seen a lot of inflation in goods and services. And then they had a look at where that inflation has come from. And what they found was that 53.9% of that more recent high inflation has come from an increase in corporate profits, whereas only 11.4% of the inflation from that previous period, the low inflation, was from increasing corporate profits.
Yep.
So we've got higher inflation, and over half of that inflation was from rising corporate profits. They also noted labor costs and materials costs. So labor costs in the recent period of high inflation only accounted about 8%. Only accounted for 8% of that price rise, whereas in the previous period of low inflation, 61.8% of that came from increase in labor costs. And then in the recent period, increase in materials costs accounted for 38% of the inflation versus 26.8% for that low inflation period. So there has been a rise in materials costs a little bit, not like crazy, but what is interesting is that labor costs make up a very small portion of that price rise.
Yeah.
And corporate profits make up a massive chunk of it.
Yeah. Yeah. It is interesting to see. And I've heard this argument. I don't know if you have more to say first, but
yeah, I do. Yeah.
It is. You want to go ahead first?
No. No, we'll talk about it.
Yeah, it's interesting. I think it comes down to, this argument kind of comes down to, I think, just a misunderstanding of what inflation is and where it can come from. It can, of course, come from the supply side, and we've seen a little bit of that. But we've also got to remember the big push of why inflation kind of started was all of the money printing that happened because of COVID. And that means that there's just more money in the economy chasing the same amount of goods. So when you say corporations are being greedy, it's like, well, corporations will always raise prices as long as there is demand to support it. And they can't just raise prices infinitely because there's competition. So there is a competitive lever there. But if even all competition is raising prices and there's still enough money chasing all of those goods, then that's what inflation is, right? That's the value of the dollar declining because there's more of them in circulation. So yeah, I think it just comes to a misunderstanding. It's like people separating inflation from corporations raising prices. No, corporations raising prices is inflation. If they're able to do it and the demand supports it, that's just what inflation is. But it is tricky because we have spoken a lot about supply side inflation. So I think it's led a lot of people to believe that inflation only comes when businesses see increases in their costs. And that is a thing. If they see increases in their costs, sometimes they'll pass those on to the customer. But there's also demand side inflation. And I don't think it's really surprising that corporate profits are going up a lot because think about all those stimulus checks. That was just new money that they just printed into and put into people's pockets. All that money's got to go somewhere, or it's probably going to go somewhere, and it's flowing into supermarkets. They're able to raise their prices, and it sucks, but that's that's what we did, right? We got stimulus checks for COVID, and now unfortunately we're going to see the other side of the the reaction to what we did.
Yeah, I think the reason that this gets really interesting because there is two sides of the argument. There's the price gouging side, and then there's hang on, corporations are always going to raise prices if they can. So why did we give them an environment where they could do that?
Yeah.
And I think when you keep breaking it down further, it really it gets a little bit political, because it gets down to a level where the question is it the corporation's job to self-regulate prices so that they can make sure that everyone can afford groceries or blah, blah, blah? Is it on the corporation to do that? Or is it the corporation's job to maximize their profits in order to reward their shareholders? And this gets quite political, but the reality is, in the system, in the free market capitalistic system that we operate in, it's the latter. Like, the job of the corporation is to try and maximize the returns for their shareholders. Obviously, within the bounds of the law, like, you have to pay people fairly, all this sort of stuff. And yes, companies, obviously, they make sometimes bad errors in that regard. But in our system, it's true that they're trying to make money for shareholders. And if they can, raise prices because the demand is there, our current free market system says they should do that. So it's kind of interesting. It gets back to something more political, where it's do you believe in the system?
Yes. Yes.
Because exactly what you're saying, Hamish, like, if there's demand, corporations will raise prices. Yeah. So is it actually back on the people or the institutions who made it possible for the corporations to raise prices? And when you look at it through that lens, then you see the $4 trillion of money printing by the Federal Reserve, and you're exactly right. That money is designed, like, the reason they printed it is to push it into the economy, to support the economy in this time where COVID was hitting and everybody was locked down, people were struggling. They injected that money. They either gave it to people, or they invested in infrastructure. They invested in, job creation, or just giving people money to buy food. Yeah. And then that action has then caused an environment where corporations can raise prices. It's very interesting.
Yeah, it is. And it's important to remember these things work in cycles. So at the moment, let's take Woolies and Coles, for example. At the moment, how are they increasing their profits? Well, both of them are just raising prices. But there's a limit to that. There's a point at which that doesn't work anymore. So then what do? What does Coles do? Coles goes, hang on a second. If we lower prices a little bit, we can take market share from Woolworths by undercutting them on some of these generic goods that they also sell. So then they'll compete on price. And then Woolies will go, hang on a second, we've got to match them on price, right? So these things work in cycles. At the moment, both of them are raising prices because there is this huge amount of money going in. But people are struggling, and there is a cost of living crisis going on. And eventually there'll be a point at which the way that Coles and Woolies will be able to make more money is by taking customers from each other. So these things, it's not as if it's just, all lose. Certainly, having just two big supermarkets is worse than if there was like 5 or 6. Certainly, like, the more competition there is, the more the less likely it would be that we've seen, like, the price increases on groceries, for example, because there's more likely to be one player who's willing to lower prices to try and get more of the market share. So it is, in duopolies, you tend to see a little bit less of an efficient market than if there's more competition. But yeah, what we're seeing right now is, likely some kind of a short-term phenomenon as a consequence, as like a aftershock of the pandemic.
That's pretty much what my video is about. So I'm glad that you agree with me. Wait and see for that video. It is an interesting topic. And, I'd be interested to just hear the general consensus. Like, what do you guys think? Head over, leave us a comment on the YouTube version of the podcast and let us know, because I'd be interested to hear what you guys say as well. But with that said, we'll wrap up our little chat on greedflation. Hamish.
Yes.
What do you want to talk about?
Let's talk about AMC. our favorite movie chain that doesn't exist in Australia. but it is the stock sponsor of the Young Investors. But no, it's not.
No, it's not.
I like how that's our running joke. Every time we're talking about some speculative gambly stock that we would never touch, it becomes it's the sponsor of it's our biggest investment.
The official cinema chain of the Young Investors podcast.
Yeah, exactly right. No, so the story's a couple of weeks old, but I thought it was still interesting because it is. I think it is interesting to kind of follow up on some of these companies that were so hyped, or some of these stocks, I should say, that were so hyped kind of during the 2021 kind of meme stock mania. So let me give I'm just going to go through a quick timeline because it really helps to understand what's happening right now. So I'll go through like a quick history of AMC. So essentially, movie tickets sold in the US have been declining since around the year 2000. So since 2000, there's kind of been this declining interest in going to the movies. 1.6 billion tickets sold in US and Canada in 2002. In 2022, the number was just 800 million, about half as many tickets sold. And you might wonder why. Well, there's really two things, I think. One is internet and streaming. So in the early 2000s, bandwidth got strong enough for people to pirate movies, and then eventually Netflix came along and provided a pay solution for streaming content. So that obviously just started to dwindle the interest. But then also, maybe even more importantly, is television and home theater technology has gotten a lot better over the last 2 decades. It's kind of crazy. You can get pretty good speakers and a reasonable TV and set up your own kind of reasonable home entertainment setup with streaming and everything now for not all that much money. So both of those two things have dramatically accelerated the improvement of the home kind of theater experience, I guess, and that's reduced the demand for going to theaters, at least on a tickets sold basis. AMC's revenue has been growing over that time because they've been able to raise prices, and those popcorns and ice creams have not gotten cheaper. That's always going to be a running joke, isn't it? Just this tiny little popcorn for like $25 or whatever.
It's hectic, man. It's crazy.
Yeah. But they've got to do it. They've got to make the money somehow.
Yeah, I know.
And yeah, I mean, theaters generally are making about 50% of the box office revenue. They're splitting the box office revenue with the media companies. So, as people do come into the theaters and spend money on popcorn and higher ticket prices, they've continued to grow their revenues, but they've always been kind of barely profitable. Like if you look at their profitability, it's like 1 year they lose money, 1 year they make money, 1 year they lose money. It's always been kind of a not that good of a business, barely kind of scraping through. And then of course, the 2020 pandemic hit, and they lost. And theaters were shut down, and they lost $4.5 billion in a single year, which was pretty big.
Bang. Yeah.
And since then, they've not been able to turn a profit. So the stock was down 95% from 2015. From its peak in 2015 to a low of $15 in January of 2021.
Jeez. That's rough.
So they were just, in a nosedive, basically heading towards bankruptcy at the start of 2021. But then the meme stock mania and the Redditors on Wall Street bets came out of nowhere and saved the company.
Yeah, they did.
Absolute, some crazy people came together on Reddit, and we've all heard the GameStop kind of short squeeze, and AMC was next up on the list. Straight after the GameStop short squeeze, everyone was like, okay, where's the next one? There's got to be one more. It can't just be GameStop. So they tried to do it, and essentially the stock squeezed from $15 per share at the start of January to $460 in 6 months. So, I mean, if you bought right at the low and then sold right at the high, which I don't think anyone's ever done in the history of the stock market, but if you did that, you did pretty well.
Yeah, very, very, very well.
Yeah,
Jeez.
yeah, not too shabby. And essentially, how does this affect the company? Well, the company was able to capitalize on the hype by selling shares during this time. So while there was all this hype, they're like, why not? We'll just create a bunch of new shares and we'll just sell them. And people will buy them because there's a bunch of hype. And they were able to raise $660 million during the meme stock hype, which is crazy, right? It's an enormous amount of money that just didn't exist. Like that was an impossible amount to raise before the hype. Then there's a bit of hype, bit of speculation. $700 million just falls in their lap.
It's just crazy because it's like I don't know if self-fulfilling prophecy is quite the right word, but it's like it goes down so much and then all of a sudden it gets squeezed up. And then because it gets squeezed up and it's a meme stock, they print, they issue new shares and they get a whole lot of money. And because they've got a whole lot of money, it's like, they actually they might be all right because they've got a heap of money now. And then it's like, maybe the stock is worth, a little bit more than whatever it was when it was 95% down.
Yeah. It is kind of funny, right? Like near the verge of bankruptcy, but now they've got a bit of money. It's like, can they actually survive? So they raised $660 million. Then a couple months later, they raised another $587 million in June for a total of $1.2 billion they raised in 6 months, basically. During this hype,
ridiculous,
which
man.
is absolutely insane. So they it's just crazy they were able to do that. Unfortunately, in 2021, the company lost about $1 billion. So they raised 1.2 billion, but they burned it very, very quickly.
Just issue some more stock. Just do it again.
And that brings us to 2022. We're not quite at the news from a couple of weeks ago, but we're working our way there. So in 2022, they created what's called a preferred share, which is kind of a mix between a bond and a share. I won't go through the details of explaining in this, but it's got elements of a bond and a share in it. You get like a fixed dividend instead of a variable one, that kind of thing. And they called these shares APE shares. APE were the ticker symbol. Which
on.
They were just targeting this at Redditors. They were just like basically had the megaphone out, like, please, Wall Street bets, come back, buy a little bit more, like, please, like absolutely begging, like blatantly just begging for them. Like it's called ape shares. Like no one, I don't know, maybe some institutional investors bought that, but
no way.
I don't know. How do you sell that to your clients? Like, we're going to buy some ape shares. We're going to buy some Tendy shares this week, Diamond Hand shares. Like what? like how do you sell that to clients?
Oh gosh.
But anyway, so they did this, and of course, it was successful, but not as successful as the previous raises. They raised $162 million. And because at this time the stock had already been collapsing back down, so their ability to raise is dwindling, right? Because if the stock price is at $1,000 versus $10, at $1,000 they just have to issue one share to get $1,000, whereas at $10 they have to issue 100 shares. So the dilution just gets
insane.
Gets insane, and there's other restrictions which I'll talk about is kind of relevant in a little bit. So like on one hand, the ape shares are just kind of goofy. Like they're kind of just funny. Like one hand, it's just kind of funny to chuckle at that. Like, give them a go. Like maybe they can raise a bit of money and survive a little bit longer. But on the other hand, it's kind of sinister, like why they were actually created. So management can't just issue any amount of shares without shareholder approval. There's limits on how many shares they can issue, and if they want to issue more, they have to get a vote from shareholders. And after the meme stock mania, where they raised 1.2 billion and then a bit more from the ape shares, that actually reached the limit of how many shares they could issue. So CNBC reported a couple of weeks ago that they basically created these ape preferred shares as part of a move to trick investors into changing the corporate voting structure and getting voter approval to sell more shares. And last week, or it was a couple of weeks ago, they actually put this into effect, and I couldn't fully figure out the explanation for this. They did some lawyer corporate voodoo.
Right.
I don't know actually how they did this, but they used some technicality in order to find a way to raise and sell another 40 million shares. So they basically used the ape shares to as some package in order to change the corporate voting structure. So it was like a red herring. It was like a false flag in order to allow them to raise more shares. And I don't know the details of this. Maybe someone understands it better than I. But I tried to look into it and I couldn't really figure it out from the publicly available information. But investors were not happy because investors thought that they couldn't raise any more shares. They thought, we're not going to get diluted. My one share is one share. It's not going to be half a share tomorrow.
Right? Wrong.
Yeah, they raised another 40 million shares, and the stock fell 40% in a day. Really? As of the last month, the stock is down 75% just in the last month. And that's on top of an enormous collapse that's already kind of taken place. So yeah, it's, it was nosediving. It's nosediving now.
Oh my gosh.
Yeah. And if you zoom out to the 5-year chart, if you're looking at that, and I'll just kind of explain it for everyone else, the recent decline, the stock's actually at $8 per share, which is meaningful because if you remember a little bit earlier, you might have remembered that I said that the bottom before the meme stock hysteria was $15. So the stock is now 50% below the bottom before the hype. So even if you picked the bottom before the short squeeze, and you held till today, you're down 50%, which is that's a mind-blowing thing. And of course, if you picked up AMC shares anywhere during the hype, you're down like 90, 95, 99%.
Yeah, that's hectic.
Which is crazy. And which is why I want to talk about it because this story wasn't that big of a deal to me. It was like, okay, they're raising shares again. Surprise, surprise, they keep burning cash. But to see that the stock is now so far down, much worse than before all the hype, meaning the pessimism about the survival of AMC is, at an all-time low essentially, or the pessimism's at an all-time high.
Crazy, dude.
Yeah.
That's crazy.
Yeah. So there you go. But they got it.
Meme stock has deflated.
What'd you say?
I said that meme stock has deflated.
Oh yeah, it's deflated. The balloon's gone. It's
that bubble has popped.
Yeah.
Wow,
crazy.
man, what a crazy story that is.
Yeah, that's why I wanted to give a bit of a timeline because to appreciate you have to kind of view it as a full picture. It's just it's an insane story. It's almost more insane than the GameStop story. GameStop gets it's front and center. It's got a movie now. I can't remember what the movie's called, Dumb Money or something like that.
That's right.
I'll have to go and see that at some point.
Yeah.
But yeah, AMC's story is really funny. I mean, I didn't even include everything. The CEO bought a gold mine at some point to capitalize on that hype. It's just a disaster train wreck of a company.
And now it's getting what it deserves.
Yeah, pretty much. So yeah,
crazy, dude.
There you go.
Crazy. There you go. All right, should I take? I'll talk about. We spoke about AMC, which went to the moon, and now I'll talk about an actual company that wants to go to the moon.
Wow, well done. You're on fire today. Absolutely on fire.
That was a crappy. That was such a bad segue. No, it's not even. It's got nothing to do with the moon, but it does have to do with SpaceX. SpaceX wins first Pentagon contract for Starshield, its satellite network for military use. Okay. So I thought it was quite interesting. The Pentagon has awarded Elon Musk's SpaceX its first confirmed contract for the Starshield network it's developing, a military-specific version of the company's Starlink satellite internet system, the defense agency said on Wednesday. So for those that are unfamiliar, I almost said Starfield. I've been playing too much of that game lately. Whoopsie. Starlink is essentially just thousands and thousands of really small satellites, satellite internet essentially, but the 2023 version of it, thousands and thousands of little satellites that get shot up by SpaceX's rockets, and then they disperse and they form this grid of mini satellites around the Earth, and then can just. Sorry, yeah.
All I was gonna say is how they shoot them out. Have you seen that video of how the rocket shoots them out or whatever, and they come out in a line? It's so cool. It's very cool.
It's kind of weird because it's also just kind of that's all it is. They don't have little thrusters or something. They literally just fling them out and then they just slowly disperse over time.
Yeah, it's crazy.
But yeah, so that's what Starlink is. So essentially, this Starshield is the same thing, but it's for military application instead. So they're going to sell it for military purposes. It says on the in a previous article that the company markets Starshield as the center of an end-to-end offering for national security. SpaceX would build everything from the ground antennas to the satellites, launch the latter with its rockets, and operate the network in space. So a Space Force spokesperson confirmed that SpaceX on September the 1st was awarded a 1-year contract for Starshield with a maximum value of $70 million. The award came alongside 18 other companies through a program run by the Space Force's Commercial Satellite Communications Office. The company unveiled Starshield last year as a new business line. The Pentagon is already a high-value buyer of the company's rocket launches and had shown increasing interest in its Starlink satellite internet. SpaceX has given few details about the intended scope and capabilities of Starshield. It markets the service, as what I said before, the end-to-end dedicated offering for national security with capabilities distinct from its Starlink consumer and enterprise network.
Are these actually different satellites, or is it just a different service on this network?
That's a good question. That is a good question.
I would presume it's just a service on the same satellite.
I think it could be, or I don't know if they need to make any hardware changes, because that's the thing about. I'm not sure. That's the thing about satellites, right? You need to make sure the hardware. You've done your digging on the hardware before you send it up, because once it goes up, you're not updating it. It's up there.
That's true. Yeah.
Yeah. So I don't know, because it was Starlink was always intended to just be consumer internet. Yeah. So I don't know if they need to add any other hardware or whether it's software is enough. But that's actually a good question, whether they're going to be new satellites or the same ones. And I don't have the answer. I'll get back to you on that. Yeah. Maybe you can look it up while I'm talking.
Yeah.
But yeah, SpaceX's award for Starshield follows its June win of a Pentagon contract to buy an undefined number of Starlink ground terminals for use in Ukraine. The initial phase of Starshield contract obligates $15 million to SpaceX by September the 30th to provide services that support 54 military mission partners across Department of Defense branches, the spokesperson said. So there you go. SpaceX winning another Pentagon contract for Starshield. What'd you find, Hamish? Anything or nah?
Nothing.
Nah.
All of this reminds me of if anyone's seen Altered Carbon, they have
I haven't. You told me to watch it, but I haven't seen it yet.
Yeah, they have all these satellites that literally looks like Starlink, but they're all in this network controlled by the government, and then they can kill people.
Oh, right.
So it's like this. It is like a big internet network that everyone's kind of hooked into, and everyone's tracked and everything. And just seeing pictures of Starlink, it looks exactly like that. And it's like, oh no. It's like don't put a gun on that. Is that a laser? Yeah, they've just got a turret on all of them. Yeah, so hopefully that's not the military application of this, but
dear idea. Well, I remember when Space Force was announced, and we were all kind of like, that's funny. We're all just kind of having a laugh.
Yeah.
But it in a weird way, it kind of is the next level of military dominance.
Yeah.
Because it's pretty sad to think about, but if you can have a whole bunch of nukes just floating around in space, just orbiting the Earth, and you control them, and whenever someone wages war on you, you can just fire up one of the nukes up in space and shoot it down to Earth in 3 minutes.
Yeah. Well, during the Cold War, I think the US they just always had a bunch of planes flying around Europe with nukes in them. They just had a bunch of planes up there just so they could be really quick if something did escalate, which is kind of what you're describing. It's like having the ability to just have them above the enemy.
Hectic.
What I mean? It's kind of crazy.
So definitely, having that kind of space dominance. I don't like thinking militaristically. Is that militaristically? But I mean, it's true. I mean, if you can dominate space, then yikes. Anyway, that's all I had to say for SpaceX.
There you go.
What should we move on to next? We got maybe 12 minutes, 13 minutes left.
Okay. I've got a quick one on eBay. This is a very, very short story, but I thought it was kind of quirky, so I thought I'd include it. But they want to do
a quirky story.
They want to do parcel delivery a new way. So they actually filed a patent this week for public transport facilitated drone delivery.
Wait,
so what
public transport facilitated drone delivery.
What do you think that means?
I'm imagining like I'm getting on the bus and I can't find a seat because there's a drone in the seat with a package.
Pretty much.
Public transport facilitated drone delivery. Or like I'm hopping on the tram and then just as I hop on the tram and just a drone just flies into the tram with me.
Or a Tesla bot just gets on, is just holding a parcel and just stumbles on.
Hello, everybody. Good day.
Try and take the parcel and it fights back. Just kills you.
Yeah. I'm hoping it doesn't mean that.
No, I mean,
stranger things have happened.
It doesn't mean the Tesla bot, but yeah, that's basically it. The system would essentially access public transport information such as bus routes, subway stops, or train times, and find ones that match up with its delivery location. If the public transportation route aligns with delivery, the system would send a drone to the public transport terminal, i.e. a bus stop, communicate the fact that there's a delivery to the bus driver, and basically hitch a ride.
That's great. That's so good.
So essentially the drone would, with a package, would attach itself to the top or side of the bus, so not inside the bus, okay? So they're not flying drones into the bus, but on top or to the side, then follow the bus route to the closest stop, get off, fly the remaining part, and deliver the package.
That's great. I love that. Why not? The bus is already going that way.
Yeah. So there you go. And of course the reason they're doing this is the hope is to save battery on the drones, which is kind of a difficult part of the process. So they can obviously have the drones basically shut down or very low power while they're on the buses, and then they can and then fly off. And I just thought it was kind of interesting. First of all, how can you patent that? Like you patent like a drone using public transport? Like it's public transport. You'd think like if a company's going to use that, other companies should be allowed to use it too. Like how could you have like we're going to patent an exclusive relationship with the USPS or like a Ozpost? Like that seems like an odd like.
We're going to patent the front seat of every bus.
We're taking that. Yeah, we're advanced booking 10 seats on every bus.
You can patent anything these days, Hamish.
Yeah. Well, yeah. Evidently so. So that's basically the story. But obviously, this is kind of just one company who's also doing kind of research and development in drone delivery. We have Amazon, which has something called Prime Air for drone delivery. They actually announced it in 2013, and they'd hoped to have done 6,000 deliveries by the end of 2022. They've done 100 deliveries, so not too much going on there.
Nice.
And then Google has a drone delivery investment called Wing, which does some deliveries for Walmart in Texas. But no one's really figured out drone delivery yet. But everyone's kind of big companies are throwing a little bit of money at it to test it.
I just think that you really have to be careful with this drone delivery stuff because it needs to be. The thing is if this really takes off, you're going to have a lot of drones flying around.
Imagine the noise.
Yeah, the noise, but also just the fact that if something goes wrong, if you have like 1,000 drones flying around a city, okay, 1 in 1,000 could have an issue, right?
Yeah.
Like that's maybe statistics. Maybe it needs to be more than that. Maybe it's 10,000 drones flying around. Whatever the number is, you're eventually going to have enough that the probabilities are that one's going to fall out of the sky.
Yeah.
And when something falls out of the sky and hits someone, it's gonna kill them.
Yeah.
So
yeah, it's interesting. It's like it in a way, it's kind of like cars in a way because when the automobile industry was blowing up, that was kind of the same question, right? It's like, well, hang on a second, everyone's driving these rust buckets around, drunk as well. If 1 in 1,000. People crash. Like it's kind of it's like a social kind of trade-off. It's like, are we going to allow that for the benefit? Is it worth it? And obviously the stakes are different. Maybe with drone delivery, it's like we don't really need to deliver things with drones, whereas cars are a bit more important, I guess. But yeah, it's interesting. It's like you're basically accepting that there's going to be a level of harm, and that's like there's a trade-off there, I guess. Yeah.
Yeah, but this is the same reason why flying cars will never exist at a wide scale. They just won't. Just won't.
Do you remember Uber was like working on like those little like flying cars.
Yeah.
Do you reckon that's ever going to happen? Do you reckon that's never going to happen?
Well, it might happen, but it'll be more like helicopters. I mean, we already have flying cars. They're called helicopters.
True.
But no, it'll never happen.
Not just free for all. Like get out from your driveway.
Then, like, what if Jim down the road decides he wants to service his flying car, and then all of a sudden he's just taken the highway to work. Yeah. The highway in the sky, and his dodgy mechanic ability, and his drone just falls out of the sky and it kills like 50 people.
Yeah, the equation is so much worse than like the driving equation. Like not even people drunk, just like car breaking down is like maybe just killing a bunch of people instead of just pulling over to the side of the road. Yeah,
exactly. Yeah, so that's the single reason why flying cars will never exist. But what was I saying? Yeah, I do like this idea. If they This makes it more plausible if they just from a delivery or a distribution center, the drone flies to a bus stop, and then it sits there, and then it tags a ride, so it's on the ground essentially until it gets to the end, and then it has to hop just a short distance. I think that makes it like I think it's a cool idea. I think it makes it more likely for something like that. The only problem I have, what happens when inevitably the package is sitting at a bus stop waiting for a bus that just never comes. It's like, do you have to go and pick up your delivery from the bus stop then?
Yeah, so true.
But yeah, that'll be interesting because I don't know, public transport. I don't know if it's like this wherever you guys live, but in Australia,
I think it's unreliable everywhere. Yeah,
iffy at the best of times. But anyway, yeah. But it's a cool idea. It gives me a chuckle. It's kind of funny.
Yeah, maybe someday.
Hitching a ride.
Maybe someday.
Oh dear. All right.
What have we got?
What else should we talk about? We'll talk about Amazon real quick and then move on. All right, Amazon. I don't have too much to say on this. E-commerce giant Amazon on Monday said it will invest up to $4 billion in artificial intelligence firm Anthropic and take a minority ownership position in the company. The move underscores Amazon's aggressive AI push as it looks to keep pace with rivals such as Microsoft and Google. Anthropic was founded roughly 2 years ago by former OpenAI research executives and recently debuted its new AI chatbot called Claude 2. Amazon is looking to capitalize on the hype and promise of so-called generative AI, which includes technology like ChatGPT, as well as Anthropic's Claude chatbots. The two firms on Monday said that they are forming a strategic collaboration to advance generative AI, with the startup selecting Amazon Web Services as its primary cloud provider. Anthropic said it will provide AWS customers with early access to unique features for model customization and fine-tuning capabilities. Anthropic will also use custom AWS-designed semiconductors to train the foundational models that underpin its AI applications. Foundation models are large AI programs trained on vast amounts of data so they can be adapted to solve a wide range of tasks. So I think at this point we all know about NVIDIA's success in the space, but to an extent, Amazon's deal with Anthropic aims to show that there are alternative chips that can be used for AI applications. So Amazon as well is really trying to step into this zone that so far, I guess, they've had AWS and that kind of thing, but we haven't heard as much kind of AI buzz with Amazon as what we have with NVIDIA and Google and Microsoft and that kind of thing. But they're definitely leaping in with this $4 billion investment.
It makes sense. I mean, I'm sure there's probably a lot of... they just don't want to be, I guess any big corporation like that, like you're talking about Google, Microsoft, they've just got so much, they're spending so much money behind the scenes on just making sure they're on the next big technology. And we don't see a lot of it, but AI is obviously pushed through the rest of it. So it makes sense to see this.
I don't have too much more to say other than it's just an interesting bit of news. AWS customers will be able to build on Anthropic's AI models via Amazon Bedrock, a service that lets customers build generative AI applications in the cloud via existing models rather than train their own models. Amazon is looking to position itself as a one-stop shop for AI. The e-commerce giant designs its own chips for training huge AI models. Through Amazon Bedrock, customers can also design their own generative AI applications using existing models, which are all run on the Amazon cloud. The company sells its own AI applications too. Anthropic already counts some high-profile backers, including Google and Salesforce Ventures. This support comes as tech giants continue to make massive bets on AI companies, a move sparked by Microsoft's multi-billion-dollar investment in ChatGPT, or OpenAI.
The money's flowing to AI companies already. The interesting thing to see will be how much of this is value to Google to be in these positions, and to Amazon and to Microsoft, and how much of it is hot air that they're just willing to fork out to, make sure it's like a bet so that they don't miss out on or fall behind. I guess we'll see. I don't know. We might see a period that of a kind of a tech, an internet bubble 2.0, but in an AI bubble. We might see something like that as the technology evolves, and as businesses like Anthropic, which what did you say, founded 2 years ago, I think. So AI companies are very young at the moment. So as we see them ramp up and more of them go public, we'll see where the level of hype is.
Yeah. I find it kind of interesting tracking back like important moments in history to like what's like the point that mattered. And it's interesting that this whole AI, like even if it's completely hot air, like even if it is, it's crazy that inflection point was literally just Microsoft and OpenAI releasing ChatGPT. Like that was the inflection point. Before that, we didn't really care that much for AI. As soon as that happened and we saw that it was, it could do some remarkable things, it was like everybody paid attention. Yeah. And it's like that right there was the inflection point. Whether AI is this massive thing in the future, whether it's just sparked a whole lot of useless investment that's just going to be burnt cash. It's interesting. That was the point where things changed.
It is. It's fascinating. I think it's like,
it's kind of like, sorry.
All I was going to say is it's just, people can now understand AI, I think. A language model is like is a way for people to actually, okay, I get it now. I kind of get what AI is. Whereas before it's kind of, and people still, I don't really get how it actually, kind of works.
No, I don't understand how it actually works.
It helps people understand, I see it. Same way that the internet probably felt like, okay, so it's like this peer-to-peer global network. Like probably felt a bit foreign, but as soon as it's like, here's email, for example, where you can send a message and it goes instantly. It's like, I get it now. So it's like, it was kind of a moment
instant
like that.
Messaging.
Exactly. It was like a moment like, now people can actually kind of see like where it's going. Like, I can see the path. So yeah.
Yeah, definitely. Yeah. I think, that moment, instant messaging was the moment for the internet, where it's like, where everybody's like, that's the inflection point. Yeah. That's what, the internet is really useful because of that.
And then you can think, I can send a message. What else am I going to be able to send later? I'm going to be able to send maybe photos, and then I can send video, like I can watch TV or what. So that just opens up your mind. Is like, I can see it now. It's the same thing with ChatGPT. Did you see, I think just recently they did an update. You can like take photos now and it'll like look at the photo and use it in the context of what you're describing. I saw like a demo of a person changing the height of their bike seat or something, and they were able to take photos of the bike seat, and it was ChatGPT was able to point to where they needed to change.
Really?
And then they even took a photo of like their toolkit, and it told them which tool to use.
Oh, that's hectic.
So it's pretty cool to see it like evolve now to being able to recognize some things visually. And then eventually, I guess maybe you'll be able to video live kind of what you're doing, and it'll be able to give you feedback, which is kind of crazy. It's crazy how quickly it's shifting like already.
Can you imagine like if the AI was a person and it's like doing all these complex like equations, like, I can 287,000 divided by the square root of blah, 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 blah. And it's like times this and the hyperbola and this and then some guy's just like, hey, what do I use? What tool should I use to change me tire? And then the AI is just like, spanner, dude. Look, just there. Anyway.
It'd be funny to see it get like sassy over time. Like, ugh, like it adds like ugh to like some of its responses. Like, come on, it's not like really. It's like Google it.
This is all humanity has to offer.
Really, you're asking me that? Didn't you learn this in primary school?
Yeah. Turn it off and back on again. Anyway.
Oh dear, funny.
That's funny. That's funny. Anyway, crazy. Yeah. Crazy. Well, we shall see where it goes.
Yeah.
Do we have time? Should we do one Q&A question before we bounce?
Yeah, let's do. Let's sneak one in here. I'll just ask you this first one.
Sure.
Hey guys, Warren Buffett has said people should just buy the S&P and dollar cost average. We all know past performance isn't indicative of future returns. What are your thoughts on investing in international ETFs? Don't think we've answered this before. Maybe we have. I'm not sure.
Yeah, I mean, I think it. Each to their own. I'm not going to give a certain opinion on any sort of stock, and I just say you have to revisit what your strategy is. If you really understand what you're trying to achieve, or what sort of investor you are trying to be, then what you end up investing in becomes a lot more obvious. So, in the same way that, you could ask me, what do you think of Google? I could say, it's a good stock for a certain type of person. Or you say, what do you think of an S&P 500 index fund? It's a good stock for a certain type of person. So it's about whether I don't think I can really add much. Like, what do you think? What are your thoughts on investing in international ETFs? Like, international ETFs could be great. If you live in India and you can see the Indian economy and how and you understand the factors, and you're looking at a emerging markets ETF, then okay, that might be a stock that sits in your circle of competence. If you're living in America and you just want to be a passive investor, maybe an S&P 500 index fund sits in your circle of competence. If you're in Australia, maybe the ASX 200 index fund sits in your circle. So I think it's, it really just depends on who you are, where your competencies lie, and also what you're trying to achieve as an investor.
Yes.
But I have no like problems with international ETFs.
I agree. I think it just depends on your personal objectives. I mean, if you're someone like Ray Dalio, for example, who's kind of a big advocate of diversification in almost every way possible, like across currencies and asset classes and countries, then you probably want to have a mix of not just American ETFs, American companies, but companies internationally or emerging markets. So that's one approach. Or Warren Buffett is pretty much only invested in American companies, and obviously he's picking individual companies, but that's just like a different example of people with two very different objectives. You have one guy who's trying to pick American companies that he thinks are undervalued, and another person who wants wide diversification, exposure to everything. So if money flows out of the US into international markets, you don't just lose because you only own the S&P. So it just depends on your objectives, I think. And I mean, I'm not a financial advisor, so I'm not going to advise you on.
This is general advice.
What objective to have.
That's what I have to say now.
Yeah.
This is general advice, and it might not be right for you.
Yep, exactly right.
It's a part of being.
But in conclusion, AMC
don't say
stock. Okay, sorry.
I can see you coming a mile away, Hamish.
God damn it.
Let's end it. Yep. Let's peace out. Thanks, guys, for tuning in. As we always say, we appreciate the hour of time that you give us each and every week to check in and have a yarn with us, or listen to us having a yarn. Thanks, Hamish, as always, for joining me. And,
no worries.
I'm glad you're feeling a bit better, dude.
Yep.
In all seriousness, I'm glad you're on the mend, because you were not looking good for a while there. So we do apologize that there was no podcast last week, but hopefully you understand.
Yeah.
You wouldn't have liked last week's podcast if it existed. You would not have liked it. It would have been Hamish going anyway. So
yeah.
Anyway.
Pretty much.
Thanks very much for tuning in, everybody. And we'll see you guys next week.
See you guys.